Still, the benchmark S&P 500 index has regained most of the ground it lost right after the presidential election. That's as investors may sense an agreement to avert the fiscal cliff could be coming before the end of the year. Suzanne Pratt reports.
The tree is up on Wall and Broad, and so is the U.S. stock market. The holiday season typically is a good time for stocks. In fact, since 1950, December has been the best month of the year for the S&P 500, with the index gaining an average of 1.7%. This December is already off to a good start, even though the fiscal cliff looms large over trading floors. Most investors remain optimistic that we'll see a deal in Washington before Santa arrives. But floor broker Teddy Weisberg isn't sure where all the optimism is coming from.
It's a real dilemma here because a lot of folks that I talk to, and customers and professionals alike, are very, very nervous. And I think that they are perplexed by the lack of weakness in the market, if you will.
Economists say no deal between lawmakers and the White House by New Year's could push the U.S. into recession by early next year. That dire prediction should be bad news for stocks, but investors remain unfazed. Experts say stocks are more likely to move in a tight trading range in the next few weeks.
If it does get towards the end of the year and it's a problem, maybe we'll see some sellers come out. But so far, people just don't see it as a problem. And the type of market action that we've seen over the last couple of weeks is typical of what we see at the beginning of sustainable rallies.
Speaking of rallies, the S&P 500 is up about 12% this year. If that holds, it will be the best return for the index in the last two and a few points better than its historical average. Suzanne Pratt, NBR, New York.